All right, welcome into Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. Why don't we take a look at these numbers? They're rocking and rolling after we just got those hot off the press from our in-house Marlin Bowling. Let's take a look and see what we're doing now. Look at this. We went from down 2 cents to up 5 1/4. Really not a big corn number, but it's going to be drug along by something else here, and we'll show you that in a minute. But look, Deese is up 6 cents to 6.91. We're a penny off the highs. We're 6 cents higher in March to 6.95 1/4. This is where the story is. We were expecting maybe a little bit bigger bean number. We got less, right? So look at this. November, that's up 53 cents to 14.65 1/4, and we're right off the highs. So this is a good time to look. Jan's up 53 3/4 cents, 14.71 1/4, and that is a new high. So both Nova and Jan just now print new highs, up 53 and 54 cents respectively. So soybeans on fire. They're rocking and rolling. How about the wheat in Chicago? Let's take a look at Chicago wheat. That's down 6.5 cents in that December contract, 8.63. We were down 12 cents going into the report, so we've come back about 6 cents. March is off 5 3/4 cents to 8.78 1/4. Hard red wheat, Kansas City. Well, we were down about 5.5 cents earlier, and now we're up. Look, there you go. We got Deese up 2 cents to 9.31 1/4, and 2.5 cents higher in March to 9.32. So there you go. How about the spring wheat in Minneapolis? Let's take a look at Minneapolis. Well, Minneapolis was down 14 cents going into the report. Now we're off, about 12 3/4. So I guess a small gain is in order here. 9.14 3/4 is last. And the Deese contract there, well, 13 cents lower in March to 9.26 1/4. And then finally, we'll take a look at cotton. Cotton was up about 199 points beforehand. Boom. And it didn't like it. Look at this. We're down 94 points now to 103.90. And that gives us the opportunity to get back with our next guest analyst. That's Todd Horowitz from Bubba Trading. Thanks for being on the show, Todd. He's in Las Vegas. What are your thoughts here after hearing we had 50.5 in beans. We're looking for 51.5. Corn was 274. Well, corn was 172.5 versus 172.4. So not a big change there. What are your thoughts?
Listen, I think this is what we've been looking for a while. I think that it's been misjudged, and I think it's still going to continue to be misjudged. I still think we're going to be less, and I think that's going to drive prices higher. I think there's so quiet, it's hard to watch the markets, but overall, I mean, I don't think we're going to get the production we think we're getting, and from the sources that I talk to, they tell me these numbers aren't even accurate, and we're less than they told us today. So I'm always leery of the WASDE report just because of the way it's calculated and the way it's looked at. It's not like they go out and count. It's like they take a generation, a guess in general, and they multiply it, which really is not the true story.
Well, I think a lot of people got caught wrong-footed, too, because this report had a history of overstating, or at least overestimating production. 6 out of the last 6 times we've seen this September report come in with an overestimate of production, 9 out of the last 10, and 20 out of the last 24. But that got folks caught wrong-footed here as we've come in. The big surprise, obviously, is beans, and that's going to drag a few other ones up with it. But the beans coming in at 50.5 versus 51.5, and that 51.5 number had been inching higher in some of the private estimates, too. So it'll be interesting to see what that final number is. You're right.
I mean, I just think that, again, the weather has not been good. We have not had a conducive growing season, and you tie in the rest of the shortages around the globe. To me, that means higher prices. If you want to eat, you're going to have to pay. And I don't see any way around it. To me, I would almost compare it to crude oil. You cut supply down, and the prices have to go higher. And I think this is very similar, and I think that's what you're going to end up seeing. Before this is all done, I would suggest we're going to be a lot higher than we are today.
Well, that'll have to tie in pretty nicely with 2 other big numbers we get this week, Todd, CPI and PPI. Those will be interesting to tell us what we've seen happening in some of these food prices. Well, some grains have come off, obviously, in price since we've gotten the last CPI number. It'll be interesting to see because there are other ones that have gone up. So we'll see how we're going to wait and see how that's affected things because, whether or not the consumer's got any cash means a lot about what they can afford. And like you said, they're going to have to pay for it if they want it. So stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Horowitz from Bubba Trading in Las Vegas after this. All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. There you go. I said it twice in the same segment. Try not to do that. But anyway, I'm having fun. Lots of numbers to go through here. Why don't we see what's going on with our livestock market? Let's start with live cattle in Chicago. Well, let's go. October's up 15 cents. Not a lot happening here, folks. 145.82 is last. That's in the middle of the range, but it's just closer to the low than the high. 37 cents higher in Dees to 151.35. All right, here, this will be interesting to see how feeders are handling this higher corn board, and they're not really handling it. I mean, it's not crazy lower, but look, October's off $1.30 to 184.27, and that's not too far from the lows either. That's about, say, 22 cents off the lows there. November's off $1.05 to 185.77. Okay, and let's finally go over to the lean hogs. See what we've got happening there before we get back to our guest analyst. We got a little bit of a mixed board. The fronts are a little lower. Got $1 off that October to 92.17. Dees is basically unchanged. It's off a nickel, one tick, 83.07. But then if you go out to the deferreds, out to May, look at that, 97 even is last. That's up 22 cents. Let's get back to our guest analyst, Todd Horwitz, Bubba Trading. What do you think about these livestock prices, Todd?
Price, Scott, I think that, again, a lot depends on crude oil, and I think we've seen crude drop into the 80s, which has kind of helped keep cattle higher and push hogs a little lower. And typically this time of year, hogs, October, December, are typically lower before we start jumping up again February and April to next year. But if crude happens to turn around, which I believe it probably will, I think that'll put a little pressure on the cattle markets and be a little bit more bullish for hogs. But I think we're probably in a fairly priced neighborhood pretty much across the board right now. And I think you're just seeing some price gyrations back and forth. But I think you really got to watch the hogs around 90. If they break below 90, it could get uglier.
All right, we're going to have to keep that in mind. Again, we've got CPI and PPI. We're going to need to see those things come through too. But it looks as though, at least from the foods aspect, things got more expensive today for sure. Really appreciate you coming on.
Thanks,
That's Todd Horwitz, Bubba Trading. He's in Las Vegas. We're going to bring it back here to Nashville so I can roll this one back over to Janet. Good morning.
All right.